Hey there, fellow traders. This is Austin. It is Monday, February 20th. It's also a legal market holiday, legal banking holiday, President's Day observed. And I never trade these type of holiday sessions. Once in a while, they're really good. You know, price will go directional and it's perfect, and you look at it and say, wow, that was perfect. Most of the time, it's just illiquid chop. And you sit through those and you think to yourself, what the hell am I doing here? Why didn't I take the day off like everyone else? So I learned long ago not to do that. And I'm going to follow up today with a bunch of email questions I've received over the weekend, some partly to the videos posted here and some otherwise. First, let me say I'm still waiting for the public website, coilmarkets.com, to go online with its new server host. And I'm not sure if that's going to be today or someday soon, but obviously it'll be real soon. Whenever that does happen, obviously it's going to. Whenever that does happen, I'm not going to be very active on the blog section anymore because, quite frankly, blogging is it's a past genre. It's just not where people are at here in modern times. And I don't fit in there. You know, blogs for the most part were in the past either a trader wanted to start a personal diary for whatever reason. They were journaling with the mistaken belief that that would hold them accountable. You know, if they put their information out in public, then therefore they would be forced to have discipline when they trade. And that doesn't work because random strangers in an anonymous blog setting aren't going to hold you accountable if you don't have the, you know, inner self-discipline. Then it's not going to happen like that. And then there's other blogs that they started out that way, and then the trader quickly went belly up, but they wanted to keep blogging, so they turned it into some news feed thing or a blog of blogs or whatever other manifestation than when it started. And then thirdly, there are professionals who are marketing systems or software or selling indicators or whatever the case may be, and most of them have left because they realize that the blogging crowd, those people just come through and read what they read, and that's fine. So anyway, I find a better fit myself in videos and written format. It takes a long time to write out any kind of length article, 30, 45 minutes, sometimes an hour, you know, when you're posting up images, things like that, and typing and editing and so on. It's a big time commitment. Whereas with a video, I can sit down here and visit with you in 10, 15 minutes, cover more ground than ever there. So just an overall better fit. I'm going to retire from the blogging scene for the most part. All I'll do is on Fridays or so just post up the week's tally because, as you know, I assume you're a serious trader or you wouldn't have listened this far. We're already 3 minutes and 18 seconds in. So, you know, you're serious about trading, I would imagine, and you know the daily results mean nothing. Matter of fact, daily results mean less than nothing. It's what happens in an entire week, in 2 weeks, in a month, and whatever that matters. But on any given day, whether somebody made a little bit of money, lost a little bit of money, made a lot of money, that doesn't really matter in the greater scheme of things. So let's talk about some alternative markets. I've made the point, I think clearly enough, that at this point in time, this moment in time, crude oil behaves much like a currency, more than anything else, more than a commodity, and it behaves like a currency during standard currency hours, which are midnight through about 6 a.m. EST, with the hot spots being 3 a.m., 4 a.m., when Europe and Asia markets open. So if those are your normal hours of operation, you're in luck. You know, that's great. And if they're not your normal hours of operation, but you want to set your alarm clock for 3, 4 a.m. Eastern and trade crude oil, then by all means do so. But if you would like to trade crude oil and you think you're going to do that during the pit session, good luck. Because all there is illiquid algo chop, and nobody else can succeed at that. Hopefully you can. If you insist on trying to pound square pegs through round holes, good luck. There are alternatives to the S&P, and part of it is some of the traders will say, well, okay, if the ES is $12.50 a tick, and you pretty much have to use $75 or $100 stop or whatever. I use a $75 stop, Is there anything that, like the YM or the NQ that trade well in your opinion? The answer is yes. Taking a look at the NQ here, it trades well, and it's 5 cents a tick. I'm gonna get away from the option expiration days of these two. This was option expiration Friday and Thursday. Those are generally squirrely days. Here is the NQ on Wednesday, past Wednesday, Feb 15th. Same stuff, same tech analysis, because what we do works on everything equally well. As long as it's up to the market. Either the market moves methodically and it's worth your time, or the market just whips and chops and it's not worth your time. It's worthless. And so the NQ is a worthwhile market. We can see where here's the open range, fills a gap, trades above, pulls back into the open range, trades to the Coil Markets Roadmap 233%. This is a 90+% probable happenstance. Any given day, any given symbol that trades methodically. And of course it fulfilled that. Pulled back, hit it again, pulled back, closed above, and then it went on to Roadmap 2, which is 62% probable on any given day. And I think it closed up near the Roadmap number 2, 500% or 512, which is a 50% probable. This happens 10 out of 20 sessions a month. This happens 16, what would be 14, whatever 62% is of 21 sessions, and then it'd be like 14 sessions, I think. And then here, this is 90+% probable. Anyway, let's say you had a long signal somewhere around 52.75 in the NQ, and there was a buy signal somewhere around there, and it went from 52.75 to 90. All right, so that's a 15 index point move. It's $20 an index point, or $5 a tick. And so from here to here is $300. Somewhere from here to there, you could pick off 200 simply enough. And then somewhere from here to there, you could pick off 200 simply enough. So if you're looking for $100 or $200 a contract, let's put it this way. How many of us have had gainful employment in the past at some point where if we made $200 a day or $1,000 a week or 52 grand a year, that was considered decent wages. I think the median wage in the U.S. is somewhere around low 30s now. So anyone who can make $200 a day or $1,000 a week is doing quite well relative to the median income. And what the good news is? You could trade 2 of those contracts. The NQ will fill 2 all day and night. So now you're making $400 a day under these statistics, right? Or $2,000 a week or 100 grand a year. If you can just accomplish that, that's all. Just $100 or $200 a day per contract, and 1, 2, even 4 contracts, 5. The NQ will trade 5 all day and night if you click them in there. That's how it works. This is a fine symbol to trade. I wouldn't be afraid to trade it myself. I wouldn't be opposed to trading it. I really don't have a need to. But if I felt a need to trade a second symbol, I'd surely take a look at this. Close above the open range, pulls back, buy signals galore, goes 300-ish ticks or whatever that happens to be. There's $300 worth of ticks in dollar range. There's 100 or 200 to be had. End of story. Easy peasy. Switching gears to the Dow or the YM. Same thing, Thursday and Friday, squirrely. Let's go back a little bit further where something isn't squirrely. This is kind of a quiet day, low range day, if you will. How to do? Open range, check, pulled back in, up to the CM233 roadmap. This is the intraday profile of profiles. Anything else that the market profiles is a distant second to the CM roadmap study. And I've said this a million times. I didn't invent this. I discovered it. This is what the market does every single day. It's not almost every single day, 90+% of the time. It's not dependent on what happened in the past. You don't have to go back and count bars or volume amounts or this, that, and the other thing, or that nonsense. I mean, who even wants to do that? Wouldn't you prefer to just sit down, apply the study to your chart and trade from there and not worry about anything else? That's what I would prefer to do. I would assume you would too. And so anyway, if you're getting buy signals, I'm going to use rounded math here for ease of use, of 20,320. So we'll just call it 320. If your buy signal is 320 and then your exit is 370 here, that's 50 index points, 50 Dow points, and each Dow point is $50. All right, so if you can catch an entry here and you catch an exit there, that's $250 a contract. It went further than that. It went maybe $300 or $350 a contract, whatever that is, but there's 100 or two to be had. Same story. YM will take 2 contracts or 4 contracts all day and night, and if all you can accomplish, the most you can accomplish is averaging $100 a day. All right, $500 a week. Any way that you make that happen, in the same way that I've been doing with the S&P, and you trade 2 contracts or 4 contracts, that's 1,000 or 2,000 a week. Following the same math, 2,000 a week, 52 weeks a year is $100,000 for turning 4 contracts, and all you're doing only, and I say only, is averaging $100 a week. Maybe 2 of those days are either a small loss or a zero, and 3 of those days make up the difference, make up the $500. By no means am I suggesting any single person can, should, or would go through a week, Monday 100, Tuesday 100, Wednesday 100, Thursday 100, Friday 100, $500 that week. That is absolutely not how this works. It doesn't work that way at all. The way it works is, in the sideways chop days, you keep losses to a minimum, bare minimum, and in the directional days, you take advantage of that. Okay, and in the small range days like this, you do what you do. And over a 5-day period of time, which is all that matters, remember, we already just established that on any given day, day-to-day results, that doesn't mean anything to anyone who's serious about trading. And the keyword there is serious. The only thing that matters is what happened, all week long, because those 5 days are really the compilation of results. Nothing wrong with the YM. $5 an index point. With the NQ or the YM, the style of trading we do, you can safely use a $50 initial stop. So you're risking $50 a contract. They both move well. I don't know that either of them. I don't know the one or the other is more methodical. The Dow represents 30 stocks and the NASDAQ 100 represents 100, and it represents tech stocks, which are hotter. So, at times you're going to get a little bit more dramatic, spiky moves, but overall, just following the plan, they're both fine traders. Nothing wrong with them. I wouldn't be opposed to trading either or both of them if I had need to. But as I've already stated, my need is I have to have something that trades methodically and has a lot of liquidity and allows me to put on 10, 20, 50, or even down the road 100 contracts if I want to, without worry of partial fills or damaging slippage. And there's just a few futures contracts that fit that role, one being the S&P, the other bonds and notes. As far as the educational program is concerned, the next thing I'm going to do is profile Dow, YM futures, and NASDAQ 100 NQ futures as to the chart setups that I would select, and go from there. What you should do if you're interested in trading those, and everything that needs to be known. And I think, as I said before, sometime during the weekend videos here, our team members only website experience is going to be interactive instead of just a static website where somebody logs in and watches the videos that happen to be posted there. And there's nothing wrong with that. In addition to that process of a library of videos, there's going to be an interactive community forum where members only log in and have a safe, secure conversation. It's going to be controlled by me so that there aren't errant posts, no spamming posts, no redirecting to other systems or methods, or hijacking, stuff like that, but a concentrated, focused conversation on the topics at hand. Here's the information, here's the method, here's what we do, here are the tools, and then registered members can ask at free will, okay, what about this, that, and the other thing, to which I'll reply, to which others can also chime in and or learn from. So I'm taking the home study course one step further than I ever have before. As I've said recently, I can be reached now and anytime, quite frankly, at this email address, austinp44@yahoo.com. And if you're interested in the live intraday experience, if you're interested in just the home study course, you need to send me an email here and state what your preference desire is, what questions you may have. Be happy to go back and forth with you, get all those answered, and get you on the path to doing the same thing we do here. Hope this helps. Enjoy your day off. 3-day weekend behind us. 4 work days left to go. See you inside. Best trading wishes.